This measures feet and inches, but today it's going to help us measure risk, specifically with MSTY. And I'm going to tell you why I don't like MSTY, why it's risky, and some alternatives to owning it. So imagine that is maybe like gold or cash. That could be bonds. Go a little further out and you get stocks. Out here could be like private investments, hedge funds. That might be like Indian street food. And that way out there off screen is MSTY. So for those of you who don't know, MSTY is the YieldMax MicroStrategy covered call ETF. And guess what? They don't even hold MicroStrategy. They're just writing covered calls on MSTY or MicroStrategy stock, MSTR. And they're doing that because MSTR is a super volatile stock. It's the one where Michael Saylor buys a bunch of Bitcoin and hopes that it goes up. And so that risk, that volatility gives you very large options premiums, which generate most of the returns for MSTY. All right, so we are looking at the TradingView chart of MSTY and MSTR. MSTR is up top and MSTY is on bottom in the blue. And we're going back as far as February 26th, 2024, because that is roughly when MSTY debuted. And you'll see that since then, MicroStrategy, if you bought that, it's up 467%. MSTY is up 278%. Both are extremely good. I mean, if you compare that to the NASDAQ, you'll see QQQ is only up 34%. So yeah, extremely good. And remember, this is adjusted for dividends. So if we don't adjust it for dividends, we see MSTY will be down 11.9% right there. MicroStrategy still up and QQQ still up, though slightly less because it does pay a small dividend. But when evaluating MSTY, when evaluating any YieldMax product where they are paying out dividends, you have to adjust to see total return. It's just, it doesn't make sense to look at simply a price chart because dividends and income are part of the yield. That's the whole YieldMax strategy, is to generate income. But what we do see is that MicroStrategy is far outpacing MSTY. MSTY does outpace the NASDAQ, but what I want to emphasize is that this is single stock concentration risk. What happens if, Bitcoin goes down, or Michael Saylor, the CEO of MicroStrategy, has a heart attack and can no longer be CEO? That stock's going to tank, and MSTY will tank as well. And MSTY is it's an income product. It does produce income, which can cushion the blow if the stock goes down, but can it cushion it enough is the question. And that's when you're going to start to see the price decline. So if MicroStrategy starts to go down, MSTY will go down as well. You'll still get the income, but you are adding risk on there. So that's one of the reasons why I'm skeptical that people should be allocating money to MSTY. Of course, if you like risk and you're tolerant for risk, remember our risk measuring stick, if you're happy going that far out, then by all means. But if you want a more well-rounded portfolio, or if you want to put more money in just a single position that is less risky, you might consider something that's more diversified, broader, like an ETF that holds maybe the S&P 500 stocks like VU, or like SPYI, which holds the S&P 500 stocks, but also writes covered calls on there, so you're getting income. I just think there are alternatives to MSTY that can produce income without being so concentrated in one stock. Now, of course, I think a small position in MSTY would be okay, but as long as it's very small and you're willing, or you're ready and willing to lose that money potentially, then you could get MSTY. But let us go over here to the good old Google sheet and let's do some math. So right now we're going to look at how an investor would do if they bought MSTY when it first debuted and just reinvested all their dividends. And we're going to look at how an investor would have done if they bought MSTY when it debuted and they just took cash. But before we do that, let's actually look at the MSTY distributions over the years. I guess it's going back to April 2024 when it first started paying. And if you can, this data is actually coming from the YieldMax website. I've just taken this and put it into a Google sheet, and you see it has a pretty, it came out strong with a good dividend, over $4 in April per share, $4 per share. It debuted at like $20 a share, so that was fantastic. And it's been decent in these months when MicroStrategy has been more volatile. So you look at October and November 2024, you can even see that going back to July, September, October. See October and November, when MicroStrategy was having that run up, MSTY's dividends were also going up because of the volatility of the stock. When it got less volatile, when it sort of stabilized, you see March of this year, April of this year, you see March and April. April, it came back up a bit, and that's probably why you got the nice May distribution. But the dividends are going to be higher when MicroStrategy is more volatile. I wish I did an overlay on that. I guess this one has an overlay, but doesn't have the dividend amount, or maybe it does. I just need to pay for it, or I don't know how to do it. Anyways, this is just kind of a chart, and you can see MSTY's distributions are not really predictable, whereas a product like ULTY has more predictable distributions, and you can kind of know what to expect roughly each week, because remember, ULTY pays weekly, MSTY is paying monthly. But anyways, going back to this, so again, MSTY debuted at about $21.60 per share, and we've got all the dividends here. We've got the payable date of the dividends and the reinvestment price as well. And what we are going to do is say, all right, let's say you invested $10,000 when it IPO'd and you bought it at $21.60. So you enter that in there. You will have received 462 shares. Your current value of the position, so the current price, we need to add that in. Current value, 1901. So we'll add $19 and a penny. And what we see here is that if you reinvested, your current value of the position would be $38,000. You would have made $28,500, which is super fantastic. It's a great return. You see how the return was created. It's because you're buying shares, you're buying a lot of shares at different prices over the years. So you started with 462 shares and you ended up with over 2,000 shares, all from reinvesting. You can kind of see, all right, in this month, October, when it was super volatile, you know, just one dividend, you bought 119 more shares. And this month you bought 100 more shares. This month you bought 153 shares. So it keeps compounding, which is nice. And that's the nice thing if you reinvest. However, not everyone will have reinvested. Some people might have been taking the cash. And that's kind of the thing to be aware of is if you're getting into MSTY, you're seeing that the 285% return comes from reinvesting. Let's see what the return is when you just take cash. Okay, so the IPO price was 21. Here, we'll just do IPO 2160. Okay. Total distributions. Okay, and then we've got total distributions, and oh, I didn't do that table right. So sum up the table, which is number of distributions times your shares owned. And then you'll see you got 18,000 in distributions. Current value of the position is going to be shares owned times the IPO price. So you take a little bit of a loss, the 10,000, and then your current value is 8,800. But you add in those dividends for 18,000 and your total profit is 17,000 for 176% return. So still pretty good, but definitely, you know, not as good as if you reinvested. And that's kind of what you have to think about is if you're investing in MSTY because you want income to support your lifestyle, you want those cash distributions, then you're not reinvesting in MSTY. And if you're not reinvesting in MSTY, then you're not getting that total return and the benefit of MSTY there. But 176% is still pretty good. I'm just saying, I think products like ULTY, which pay weekly, which are more diversified, ULTY owns some of MicroStrategy in some cases. I think the YieldMax fund, YieldMax, what's it called? Fund of funds. Yeah, YieldMax, I believe they also own, they have a 64% distribution rate. I believe they also own MSTY itself because let's go down to the fund holdings. They own the Palantir, Apple, Microsoft, to download all the holdings here. But they basically own MSTY. Yeah, they own MSTY as well. So with YieldMax, you're kind of getting a fund of funds, which is all the ETFs, all the single stock ETFs in one fund. Yeah, YieldMax Universe of Funds Options Income ETF. So that's kind of an alternative. Those are two alternatives. You could be doing YieldMax. You could be doing ULTY. And see, YieldMax also pays weekly, which is nice as well. So if you're really looking for an income product, something that you could put more money in, I think YieldMax or ULTY are better alternatives to MSTY simply because you might be able to sleep better at night. But there are some people who are night owls and don't mind not getting enough sleep and owning MSTY. And they've done really well. I don't discredit what MSTY has done. I just think in the future, ULTY might be a better play for the income investor. For the growth investor, for the investor who likes to take risk, MSTY is definitely still on the table. But of course, that's just my opinion, not financial advice. So I hope you guys enjoyed the video. Hope you learned something as well. As always, remember, how far out on the risk spectrum are you willing to go? You know, if you're like they say, the orphans and the widows probably just want to go about here, but the young guys, people with a lot of earning potential for the rest of their life, might want to go out even further. So thanks for watching, guys, and see you in the next video.